Here we go. The Thursday episode. I love Thursdays because it's one day before Friday, which is one day before the weekend. Thankful Thursdays. Hey there. Thanks so much for joining me. I'm Mitch Goldberg. This is your place, your show, the post-market show about the stock market, today's news, market action, personal finance, financial planning, anecdotes, stories, and the benefit of my 32 years of experience as a financial advisor. It comes out all right here. Thank you for joining me. It's Be the Boss of Your Money. We're going to talk about this market. Is the market running out of energy, or is it just pausing, just resting before the next uptrend? It's gotten quiet real fast. It's almost like Thanksgiving is this week instead of next week. So we're going to talk about that. And I'm going to talk to you about what I'm going to be doing for the rest of the year that you should know about. Because whether I do it for my clients or you do this for yourself, you're going to want these tips and you're going to want to know about them. So let's roll the intro. And it's going to be a good show. I'm looking forward to it. Let me find the intro. Here we go. All right. Thank you so much for joining me. I'm Mitch Goldberg. We're just getting started. We're talking about a couple of things. These are important things, like what I'm going to be doing in my business on behalf of my clients between now and the end of the year. If you think about it, next week is Thanksgiving week. We've got about a 2.5 week space of getting real work done. Then we get into the holidays, hard into the holidays. And before you know it, we're like 3 or 4 days into January, just like waking up again and saying, wow, we've got to get started again. Let's see what we need to do. So that's what we're talking about today. If you have any questions about what we're talking about now or investing, personal finance, what have you, hit me up in the comments. I love hearing from you. And that's actually the best part of doing this. You see the social media icons right over here. Insta Mitch G, Client for Strategy, Mitchell Goldberg, Client for Strategy. So, check me out on your preferred place, YouTube or Instagram, and follow me there. I post a lot more content than just what you see in the live stream. And you want to follow my activity, not just what I post, because I'm always commenting on other people's content that I think is really valuable. And sometimes people post content, I'm like, that is amazing. I am so glad I stopped scrolling to read someone's content, to read their post or watch the video that they posted. People always ask me, how are you a good content creator? Like, I'm glad people use that word good, by the way, with me. I appreciate that. You can't call yourself a good content creator. Other people have to call you that. But, I'm a really good content consumer. I used to say to people, if you want to be a better writer, then be a better reader. It's the same thing with any kind of content, whether if you want to create video, you want to be a good video creator, you have to watch more videos. You have to learn the craft. Of course, you have to know what you're talking about. So that's what this is about. No, not about content creation. All right, so we're going to go through a quick breakdown. Stock market got real boring real fast. We had that dip in September. Looked like it's going to be an ugly run into the year end. We had a major rally in October. Just a fantastic rally. The S&P was up over 7% in October. We rallied into, let's say, the first 2 weeks or so of November, but all of a sudden things are quiet. And it's just like, are we giving this rally back? Are we going up more? I mean, right now, if you just turn off the machines and close the stock market for the year, we would be in pretty good shape. But a lot of this depends on when you came into the market. Not everybody buys stock on January 2nd and sells on December 31st. In fact, very few people do. Most people uh, invest when they think there's an opportune time. Whether or not they get the timing correct or not is a whole other story. I think most people who invest actually invest with dollar cost averaging. Putting money, putting money into your 401k plan every pay period, things like that. Sometimes you have a big rollover. You leave your job and you have a 401k plan to roll over to an IRA, which is, by the way, something that I do quite a bit of. So, you know, think of your financial advisor. If that is someone, if you have a financial advisor you're happy with, then I'm very happy for you. If you have someone who you're not happy with, then give a look, see over here, and give me a call. See if we can see things eye to eye and if we're a good fit. Okay, but the so it's things are quiet, and is the stock market ready to roll over? Meaning go down and give up a lot of gains for the year, or is the stock market just pausing? You know, just hitting a quiet period while it regathers some energy. So is it losing energy, or is it just pausing to catch its breath to go higher? I'm going to say that the market is actually, if I have to pick one side or the other, I'm going with the market is losing energy. And I'm not just saying that because of the market's kind of flattish. There's an old expression, never short a boring market. In other words, never bet on a boring market to go down, because that's when surprises can happen and send the stock market shooting up. I'm not looking to invest based on surprises. I'm looking to invest based on, my clients' goals, their aspirations, they when they're going to need their money, that sort of thing. I'm not really into just saying, let's buy this stock this week because I think next week it'll go up after earnings, and then we're going to sell it, and then we're going to buy another one. If that's what you're into, then by all means have a ball. And if you're good at it, I'd love to know. All right. Uh, it's a bull market, so I think a lot of people think they're really good at it. Rhonda is out there. I just want to throw a quick shout out. Thank you very much, Rhonda, for joining us. I really appreciate it. Good evening. I saw your other message. Sorry I didn't reply yet. Just it's like you, right? Like, we're just like super busy people. We're raising families, you know, taking kids to doctor's appointments, taking parents to doctor's appointments, and we work, we've got a job, it's just a very busy time. Now we've got Thanksgiving coming up, and we're like, what are we doing for Thanksgiving? We're like, right now, my wife and I are looking for which restaurant we're going to order our Thanksgiving package from. No, we're not cooking Thanksgiving, and don't blame us. Don't at me. It's not our thing. Okay, it's not something we do. It's not something we're good at. For me personally, it's not something that I think I would really enjoy getting into. Yep, quite busy. I'm still working. Okay, me too. So, and if you're just listening to this with the earbuds, or just keeping the volume on in the background, that's cool, because I try to speak in a way where you could see everything. Even if I show something on the screen, I say what I'm looking at. This way, people could just hear it and follow along very easily without missing anything. So the reason I am saying I think the market is more like running out of energy is because when I see small caps, all right, when I see small caps starting to go down, and I see crypto starting to go down, to me, when those go up, that's an indication of a lot of energy, a lot of aggressiveness, a lot of what we call animal spirits. And when they start to back off, it's like a loss of energy. Enthusiasm has run its course for the time being. I mean, don't get me wrong. In another 10 or 20 years, we're going to look back at today's stock market and say, "Boy, I wish I put all my money in that day. It was so cheap." That's the way it works. It's just getting from here to the next 10 years is not so easy. All right, so let's take a look at how the market did today. Okay, let me take off the those icons. All right, that's better. Let me make this bigger so you could see it on your smartphone. All right. All right. So the Dow off 60 points, no big deal. NASDAQ up 72 points. That was very heavily influenced, by the way, by a company called NVIDIA, which is about an $800 billion market cap. We talk about NVIDIA here on the show a lot. If you recall, the acronym FANG for Facebook, Amazon, Netflix, and Google. I use FANG-M. That's Facebook, Amazon, Apple. Then it was Netflix, Google, and Microsoft. So FANG-M. But I changed the N from Netflix to NVIDIA a couple of months ago, and I did like a whole show on it. And NVIDIA it's about twice the size, almost twice the size of Netflix. And if I had to pick the next company to hit the $1 trillion mark, it's NVIDIA. And it's gone up a lot, so it's easy to say, hey, $800 billion. In this day and age, getting from 800 billion to a trillion is, it can happen pretty quickly. We've seen it before. It's always a strange thing to see a company hit $1 trillion valuation, but after three or four or five companies hit it, then you're like, yeah, it's not that still a big deal, but the shock value is gone. That's for sure. Okay, so S&P was up 15, gold really nothing, down 9. It's still over 1800, so I guess that's good for gold. Oil down, up a little bit, but under 80. Good for consumers if it goes lower. I want you to know everybody is talking about inflation, and that's the big topic of the day. I mean, inflation to me, if I had to pick, like, what is the word, what is the economic word of the year for 2021? It's inflation. But if we see inflation go down, that would that would because if we see inflation go down, that would be because COVID mutated again, spread out of control, caused more lockdowns. I mean, there are lockdowns now in Germany and other parts of Europe because COVID cases are just surging there. They're a few weeks ahead in terms of winter weather ahead of us. So it's surging like crazy. COVID, the Delta variant in Europe. People are worried that uh, is a predictor of what's going to happen here in the U.S. But we do have a very high vaccination rate. We're getting kids vaccinated now. I'm back. In fact, I got my booster shot already. I got my booster shot tomorrow. Yeah, today. Actually, today is 1 week that I got my booster. I feel fine. I know as they say, it takes 2 weeks for full effectiveness. But I'm glad I got it. I got my flu shot too. I'm a believer in it. If you're not, you're not. If you don't trust the science, okay. Melanie is out there. Melanie, Diane. By the way, if you are a live streamer and you want to learn more about streaming, Melanie is with a company called StreamYard. I'm using StreamYard right now to stream to you. It allows you to stream simultaneously to different destinations, to different social media timelines. So I'm streaming now to 2 Facebook timelines, 1 LinkedIn timeline, and YouTube. So that's 4 destinations. I could add Twitter at this point. I think I'm going to do that next week. But Melanie is just always coming up with new tips, tricks, ideas, strategies to make your live stream as good as it could be. So follow Melanie Diane on YouTube. She's putting out a lot of great content, and I want to thank you for that, Melanie. So let's go on. The 10-year yield is going down again, down to 1.58. So what I'm saying is this. Let me show you the 10-year yield. The yield is, see that, 1.587. The VIX is, it's been trading between like 16 and 18, so it's 17.59. No big deal. The Russell 2000, see the Russ 2K, down 13 points. That's been going down pretty steadily. Okay, let me get out of that for a second. Let me put my social media overlay on. All right, there we go. So the reason I say is, like, if inflation goes down, I know you want inflation to go down. There's most look, we could debate what's causing inflation. All right. We could debate that all day. But as the 220-pound economist in the room, there is a shortage of truck chassis. There's a shortage of the shipping containers. There's a shortage of people to load and unload shipping containers. Okay. It Whenever COVID pops up in China, China just literally, if there's a case in one port, they just shut the entire port down. There was a massive storm in the state of Washington and Vancouver, which is wreaking havoc on the northwestern water ports of entry. Okay. It's just there's just problems all over the place, and it's not going to be solved in a month or two. It's going to be a gradual process. You won't even notice it. It's going to be solved so slowly until one day we're just not talking about it anymore. But that's one thing in inflation. But if you're worried about inflation, if COVID cases pop up again, the economy tanks, you'll see inflation come down again. Rising inflation is it's a reflection of a stronger economy. Now I realize we've had stagflation, where you have inflation with a weakening economy, which we had in the 70s. That's what the 70s is famous for. And then Paul Volcker came in, former Federal Reserve chairman, and jacked up interest rates, put the economy into a recession in 81, 82. But he gets credit for, squashing inflation for like the next 40 years. But I'm not giving him all the credit, because don't forget, in 1980 is when the PC, the personal computer, was invented. And that's when it first started making its way into businesses, into offices nationwide. And that unleashed a creativity boom, which squashed inflation. So I'm giving more props to technology than I am to Paul Volcker, who threw the economy into a recession. Okay. Sometimes your view of history changes as you learn more. Okay. So that's my spiel on inflation. Spiel. All right. Let's just take a quick look at something we talked about yesterday. We spoke about the EV stocks. Let's get rid of that. Okay, pop myself up here. We spoke about electric vehicle stocks. All right, and I did the whole show yesterday on this. And Tesla's up another 7, but Rivian was down yesterday. It's down another 15% today. So this stock was just about 180. Now it's 120. That's a pretty bad bruise, because so many people got into the stock after the IPO at higher prices. Lordstown Motors continues to just struggle, down almost 1%. There's also, SEC investigation going on. The founder of the company left. So who the heck knows what's going on with Lordstown Motors? Lucid, that's the other one. It just had a double, but that's down over 10% today, with 64 a couple of days ago. I saw my main man Matt at the gym the other day, and he loves these kinds of stocks. I wonder if he's still in it. And Blink is a charging station company, and so is ChargePoint, and these stocks have come off recently too. And the whole point of the show yesterday was, to me, the point was these stocks have gone up like crazy in valuation, where Lucid and Rivian, are bigger than Ford and GM. And my point was, now the hard work has to come, where the earnings and revenues, the fundamentals of these companies, the actual business has to grow into the stock market valuation. And either the stock stays flat while the business catches up over the next few years, or the stock goes down, because nobody wants to hold on to the stock that long and wait and take the risk, because the business might not do that well. And I said, that's what I see happening. It just happened really fast, is what I'm saying. But that's what we spoke about yesterday. See, there's value to be gained in the show. You could gain value here, because I'm sharing with you 32 years of perspective. Okay. And now what I just want to do is get back to you. Okay. About a couple of things about why I think market is kind of running out of energy. Okay. So it's suddenly quiet, like it's Thanksgiving this week instead of next week. Earnings are basically over. We had the last of the big earnings. We had the retailers this week: Home Depot, Target, Lowe's, Walmart. We had Nvidia yesterday. Nvidia was a rocket ship higher today. Um, the Fed starts. Excuse me, I have an itch. Okay, it's live. I know. The Fed starts tapering its bond purchases at the end of this month. That's another thing. We're going to find out soon if uh, Jerome Powell is going to be reappointed as head of the Federal Reserve or not, or if it'll be one of the Fed governors, Lael Brainard. That's a whole other thing. That's for another show. Uh, we're waiting for a budget deal. We've got the debt ceiling fight coming up in a couple of weeks again. We're still waiting to see if the Democrats could get their uh, Build Back Better agenda, that deal going or not. We're waiting to find out if the Democrats could actually unify and govern. You have the majority, but can you do something with it? So it's their contest to lose. Um, and then what else do we have? Okay, so we have a couple other things. If I can only read my own handwriting here, all right. But we're looking for some new positives. But without we had such a strong earnings season, and without more great earnings coming up, we have to wait till the second week of January for the next earnings season. I mean, right now it's the middle of November, so we have to wait almost 2 months for the next earnings season to really kick into high gear. So we're really just dependent on economic news, economic data. And I think people are worried that the economic data might not be that great because of inflation. So I think it's going to be, at the very least, it's going to be very choppy. Tom Lee said it best at Fundstrat. He said, I think there's a buyable dip coming before the end of the year. Are we getting a 5% dip before the end of the year, a 10% dip? Who knows? We might not get it. To me, though, I want to show you crypto. Let's go to crypto, okay? Bitcoin was just 68,000. Now it's 57,000. That's even for Bitcoin. That is a sizable dip from 68,000 to 57,000. And it's red up and down the screen on all the cryptos. I'm sure if we look hard enough, we could find one crypto that was up. It's not on my screen. Even the Doge, which was hanging out at 26, 27, 28 cents, is down to 22 cents. So here's one. Algo Coin Metrics was up 22 cents. Okay, so one out of like 35. But so crypto is down, small cap stocks are down, and that to me means energy is leaving the market. We can't control what the market does, and this does not mean that I'm rushing out of the market. I'm going to go into cash with every penny I have, and all of my clients are out of the market. And that's not what this means. But I want you to know where we are, what I expect, so that when we do get something that we expect, which could be, a sizable dip, maybe this is your opportunity to put some money to work. Or maybe if you expect a dip, you won't chicken out and ruin a good long-term investment plan because of a bad couple of weeks. All right. That's more about what this is about. Let me tell you some of the things that I'm going to be doing for the rest of the year. I'm going to control the things I can control. All right. Well, first, I have to go through accounts and push out everybody's who hasn't taken it yet, their required minimum distributions for the year for all those who have an IRA who are 72 and older. That's one thing I'll be doing. The other thing is I'm going to be rebalancing accounts. I always look to rebalance accounts, but you don't want to rebalance too much, because if you don't want to rebalance too much, because if you do, you're giving up more upside. If you don't, you're taking maybe more risk with the asset allocation that you currently have. You also could create little taxable events in clients' accounts if they're not in all tax deferred accounts. But I will be looking to rebalance. I typically do that around this time of year. You could say, well, why don't you just wait till January? Some people I do. I'll wait till the next year. But once you put that off, you start to think in terms of like, well, maybe I'll rebalance in January, and if I don't rebalance for the rest of that year, I have to wait to the following January, and you can't put it off forever. My clients expect that I will rebalance their accounts during the year. Okay, I have bands in which I go by. So if the market doesn't move up enough, I might not, or down enough, I might not even rebalance. But I'll let the client know why I did or did not rebalance. The other thing I want to do is right size individual positions. Not every client has individual stocks, and that goes for you as well, who out there who are watching this. Not everybody is appropriate for individual stocks. So what you want to do is if you know like if you're one of those people in individual stocks, and I have clients who are in individual stocks too, I want to make sure I'm right sizing positions because if you take a look at the giant rally this year, like 60 some odd percent in Alphabet, which is Google. Google still the symbol GOOGL, but it's the company changed its name to Alphabet. So let's just go by Google. If you have such an outsized gain and you bought that stock when you were 50 and now you're 60, for example, you could have hundreds of thousands of dollars or more, millions in it. You have to look at how big of a percentage that is for your net worth. You have to look at financial obligations coming up for the client. And it might be time to say, we need to sell off, reduce that individual position by 10 or 20 or 30%. And that's the kind of thing I look to do. I also look to take losses. Now, pretty much I've already done my tax losses. I do tax loss harvesting in October because sometimes I want to buy a stock back. And by the time you get to the end of the year, some of these down stocks start to move up again. So I've pretty much done I've done my tax loss harvesting, but you could do that for yourself. If you want to do a tax loss harvest, I'll give you an example. Let's say you have an oil stock that you bought. It's finally recovering, but it's still down. You could use a tax loss. Maybe sell that oil stock and buy another oil stock, a comparable oil stock. So you're still in the oil patch because if one stock goes up, typically they all go up. If one goes down, they all go down because, birds of a feather flock together. That's how sectors work too. 90% of your upside or downside is determined by the sector of that particular stock. So if you have an energy stock that's down, most likely the whole energy sector is down as well. And if you have an energy stock that is up, you get what I'm saying, okay? So what else am I going to be doing? Not just updating clients, like here's where we are, here's what we've done, here's your gains. I'll have your 1099 out to you as soon as it's available. I'll have your year-end statement out. If you need anything, give me a call. It's more than that. Let's talk about your risk tolerance. Has something changed? I find that, I've been doing this for 32 years. So after lengthy bull markets, people's risk tolerance goes up. They have more tolerance for risk because why not? The market's up a lot. They feel better about things. Some people feel like it's not invincible or smart. They're just not worried about the risk so much anymore. They forget. And then the market goes down. People become too risk averse. So you want to make sure you have that conversation. I want to make sure I have that conversation with clients, but you could have that conversation with yourself or bounce it off a friend or do something. But make sure you're having that internal contemplative thought process of whether or not your portfolio is up too much. Look, I know that sounds weird. How could your portfolio be up too much? Make sure that you're not too overexposed now into a stock or a group of stocks or just stocks in general. Because maybe if the market goes down a lot and your account, you look at your account, you go, holy cow, look at this. Look how big this account has gotten. It's huge. I can't believe how much it's gone up. So what if it went down 30%? Would that just crush you? Like if you're really pumped up on how much your account has gone up, then you're the one who really should be taking a look to see if you need to reduce your stock exposure. Let's see who else. A couple more comments out there. Melanie, oh, you're so sweet, Mitch. Love your show when I'm able to listen in. Thank you. Thank you so much. I love the work that you do with Christian over at StreamYard, by the way. Great stuff. And you got to launch a podcast. You suggested that to me. Like, I think you sent me a DM. I don't know if it was on in Facebook or Instagram. But you're absolutely right. I'm kind of like, honestly, I could figure it out, I guess, but I'm not too sure. And just the time, like if I just the time thing, like to sit there and figure it out. Maybe you could coach me through it. We could do something like that. I'd really appreciate that. Okay. That would be awesome. Filippo made it. Thank you. Apple baby, crypto oofa by the dips. You are such a crypto ape. I love it. By the way, Filippo, I love the pictures uh from your event last night with the Unicorn Network, talking about crypto and educating people about it. And nice suit, by the way. It goes well with the new haircut. Very good, man. So great pictures. Filippo Anthony, he's an expert with crypto. So if you need to talk to somebody or want someone to do like a group presentation or just educate you one on one, he is the person to do that. It's not a free service. That's what he gets paid to do. So, but it's well worth it. Okay. I expect a 90% retrace on every trade. I try to maintain 10% crypto, 50 stocks, 50 cash. Why 50 cash? By the way, that equals 10 plus 50 plus 50 is 110. And I know you give 110% of your effort to everything, but I don't know if you could invest more than 100%. I guess if you use leverage or margin, you could. Oh, here it is. That's 110 figures. So that I did not see that comment yet. I swear, that's 100. That's 110% because I always give 110%. I knew it, man. That's right, baby. All right. So thank you very much. I'm gonna get going. I don't do the live stream on Fridays. Um, I will be back on Monday. No, it's not for like any religious reason or whatever. It's just that I found viewership goes down on Fridays, and to do this 5 days in a row was a lot. So one day I decided I'll just do it Monday through Thursday and make my life easier. But I do send out a blast email on a lot of Fridays, which is chock full of cool stuff. So if you want in on that, DM me with your email and I'll put you on my list. I do not share my email list with anybody. It's strictly for my own distribution. And that's about it. I'll bid you farewell. Cheers. Have a great weekend. Talk to y'all. Take care.